Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 10th through July 14th, where we'll try to help you make money trading in July. We'll talk about how to make money trading in the summer. We'll do our market analysis, talk about our strategies, our trade ideas for, again, the trading week of July 10th through July 14th. We hope you all had a wonderful 4th of July Independence Day and a great trading week, a shortened trading week with the holiday, and we hope you all are doing well. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan. Our Google documents with our notes for our weekly trading game plans are publicly accessible. You can find a direct link to this Google document in the description box below. We store our Google documents for our weekly trading game plan notes in a publicly accessible Google Drive folder. And again, you can find the direct link to this Google Drive folder in the description box below, so you can refer back to these notes as well as notes from our previous weekly trading game plans. Welcome, Stonks for Days. Thank you for joining us. Hope you're doing well. So let's look at how the markets ended up on Friday. We can see up until, about 1 p.m. or so, they were trying to run up. And then after 1 p.m., all the markets declined, pretty significantly to end a little bit below where they started on Friday. Although we can see we had more advancers than decliners, about 2/3 advancing versus declining. A little above 50% new highs versus new lows. We've got about a 60-40 split of stocks above their 50-day moving average versus below, and about a 50-50 split above their 200-day moving average. So again, the day ended on a bearish note, week ended on a bearish note. After about 1 p.m., we saw that, severe turnaround. So after the jobs data, and we'll look at that economic data, the markets ran for a while and then decided to roll over towards the end of the day. You see the heat map of the fangs. There was probably profit taking in the fangs, except for later in the day, it looks like Amazon and Nvidia ended up green. The only other sectors that were green was energy, basic materials, and we'll see that in the groups as well. Some of the recent news: Meta's threads coming out, U.S. to send Ukraine more munitions, wage gains, low unemployment. Again, we'll look at the discrepancy between the jobs claims data that came out on Friday versus the ADP data that I think came out on Thursday. Short sellers help fuel the rally. Tumble on Friday. Rate hike fears. Again, we'll talk about the impact of some of the economic data on the probability of the Fed hiking interest rates in July and going forward. See, oil surged back up over 73 now. It's kind of a range bound now between 70 and 75. So part of this, and we'll talk about it again in the futures, is based on Saudi Arabia and Russia extending their production cuts. Natural gas, again, pretty range bound between 2 and 3, 250 right now. It has been making a slow trek back up to 3. Gold declined quite a bit. Support at 1900, and again some resistance at 1950. And again, we'll see that in the futures as well. Welcome to Ricky Khan. Thank you for joining us. Glad to see you. Hope you're doing well. We saw some volatility in the dollar. The dollar had strengthened a little bit on some of that economic data, and then you can see it weakened a little bit. And we finally have all the treasuries are now back above 4%. We've been saying for quite a long time that we expected treasury yields to have to be above 4% given the Fed interest rates. And, finally we saw that. So we saw a significant decline in treasury bond prices. Welcome, Mighty Soldiers Trades. Thank you for joining us. Glad to see you. We'll take a quick look at each of the indices. You can see, the SPY, the S&P 500, is pretty much running along the top of its trend line in this upward sloping channel. So again, got a slight rejection off of that towards Friday, but again, it's running very high. We can see, it's got some room to run, still significantly above the moving averages. So, we can see some further corrections as those moving averages catch up. Look at the Qs, NASDAQ. Again, very similar. Again, very, very much above its moving averages. Looks like it tested that previous high, about 371 or so. So again, I'd expect some significant resistance along that high, and it'll be testing and rejecting off of that until it finally breaks out, tries to go up to the further high around 400 or so. Well, thank you, Mighty Soldiers Trades. It says my favorite fundamental analysis on the web. Thank you. I appreciate it and glad to see you. Look at the Dow real quickly. So you can see the Dow has been pretty much flatter, a lot more resistance. We saw some weakness in the manufacturing data. The industrials were somewhat weak, so we still see some significant support in that moving average. But again, the Dow is much more range bound, trading much flatter. Look at IWM. IWM's, again, got some support from that longer term moving average. Those moving averages are pretty tight. Again, trading very flat, very, very much in a range. It's got, almost equal upside and downside. So I'd expect, volatility around these moving averages kind of bouncing up and down until IWM, the Russell, picks a direction. Look at the VIX. VIX did have a quick pop when the ADP data came out. We saw, a pretty negative reaction to that greater than expected employment data from ADP. So we see a little bit of a pop up, but then again, as the VIX has been doing, it receded pretty quickly, and I think it's below 15 again. I think 1483. This is the actual VIX or so. So let me grab a drink a second, and we'll look at the groups and the industries. Okay, so we can see Friday, the main sectors that were positive were energy, basic materials. Again, sector rotation. Actually, earlier in the day, I believe basic materials was red. I think energy was red as well, but we saw that surge in oil. Real estate's been kind of in the middle, and then we saw the rotation out of healthcare and consumer defensives. Again, healthcare has been one of the weakest for the week, as well as we'll see for the month. We saw, again, a little bit of a flight to safety, utilities, a little bit real estate was slightly positive. Technology is pretty neutral for the Friday and for the week. Again, basic materials was underperforming for the week, and then we saw a sector rotation back into materials on Friday. Again, for the month, healthcare's the underperformer, utilities underperformed, basic materials was pretty weak, and energy, real estate, technology, and consumer cyclicals. We see industrials were strong for the month, but weak for the week. So again, sector rotation out of industrials into, basic materials, energy towards the end of the week. Again, healthcare is underperforming for the month, so we might see a sector rotation into that. Quarter energy was negative, so again saw a sector rotation into that. Industrials were strong, so again we might see a sector rotation out of industrials, some into basic materials, energy, and utilities is mostly a flight to safety. So now we're in second half, it's July, so we might see a rotation out of the top performers for the first half into the underperformers for the first half. So if we look at the half, technology, communication services were the strongest, and we did see some rotation out of the FANGs on that flight to safety. And again, we saw utilities, real estate's been, trying to slowly work its way up. So again, I think sector rotation continues to be the name of the game, particularly as we're running on the top of this trend for the S&P, etc. So again, I think that's the opportunity. We'll look at industries quickly. So Friday, again, oil. See some strength in aluminum, coking coal picked up. Again, sector rotation. Solar was underperforming, so sector rotation into solar. Some of the other materials, steel, thermal coal. Again, energy, lifting those up. The REITs were pretty mixed, but some strengths in some of the REITs. Look at the underperformers from Friday: retail, healthcare, some REITs, industrial REITs, retail REITs. So again, we might see some sector rotation there. For the week, oil was strong. Some of the REITs, again, weakest. Uranium, again, it's been a constant sector rotation in and out of uranium. It's, sometimes the strongest, sometimes one of the weakest. So that's an opportunity we've been watching and trying to take advantage of is in uranium. For the month, see some airlines, oil again. And we saw silver and gold were pretty weak. So again, opportunities, I think, in a rebound in silver and gold. And we'll see that also in the futures as well. So for the quarter, you see uranium was quite strong. And gold and silver were very weak. So again, I think there's an opportunity there to see a rebound in gold and silver, particularly as part of a potential flight to safety, some agricultural inputs, and we'll see that in the futures as well. Welcome, Easy Mike. Thank you for joining us. Glad to see you. You're listening from the beach. Okay. I wish I could broadcast from the beach. Maybe one of these days. We are back from our travels. I apologize if we missed out on some of the chats, etc., while we were traveling, but we should be back for this week. Okay, so we looked at the sectors and industries. We'll look at the economic data from this week. Just a quick note that apparently our free tweet shift automatic feeds from Twitter stopped working around the 1st of July, as they stated, due to unforeseen circumstances with the Twitter API. So we're investigating the best, ideally free alternatives to restore our automatic feeds from other Twitter profiles into our Discord. So we'll be trying to restore that as soon as possible so that those news feeds, economic data feeds, etc., are restored as soon as possible. So we'll go to the economic calendar in investing.com, look at all the economic data from this week. I zoom that up a little bit. Okay, so Monday we had a half day. Markets closed at 1 p.m. due to the Independence Day holiday. We did get manufacturing PMI was pretty much in line as expected. Construction spending was up. So again, new homes, new construction is positive. However, manufacturing was weaker than expected. New orders was positive. Durable orders, factory orders down. So again, we've seen the potentially slow down in the economy. The Fed minutes came out. There was some reaction to that, although, as we talked, most of the Fed officials, voted for a pause, but they expect, 2 rate hikes going forward. So that's kind of our expectation. There was some, market reaction to that. There is no real rate cut. We're going to get 2 more rate hikes this year. Mortgage rates creeped up again. Bond yields, the 10-year went up a little bit. So mortgage rates went up. Job cuts was much less than expected. And then we got the ADP number, which was, almost, it was more than double the expectation. There was a very negative market reaction to that. So figuring, okay, the employment market's still very strong. and therefore the Fed can hike to fight inflation and not worry about the employment market. Now, again, the next day, on Friday, we got more jobless claims data, and that showed, that this ADP number was kind of off. So I think the jobless claims data is probably more accurate than the ADP number. So here we saw initial jobless claims was a little higher than expected. So again, that tells us potentially that ADP number and the reaction to it was erroneous. ISM manufacturing was a little better than expected. The JOLTS job openings less than expected. So again, people are filling these jobs, but there's still, a very large number of job openings. So there's still opportunities. The employment picture is still quite strong. Oil inventories were down more than expected. So again, then we saw oil jump up, into the low 70s, now sitting around 73. And then Friday, we got the jobs data that shows, payrolls were strong, but not, as strong as unexpectedly strong as the ADP data showed. And it shows the unemployment rate popped up to about 6.9. The U6 number, the overall number was as expected, 3.6. So again, that negative reaction to the ADP number seems to be erroneous. And this employment data seems to be a more accurate picture of the actual employment. Natural gas storage, again, we had a slight build. Natural gas prices, still sitting in the mid twos. Rig count actually increased a little bit, so possibly with that Russia and Saudi Arabia production cut, possibly U.S. Oil producers are ramping up just a little bit. So we'll look at the economic data for next week. So let's see, we've got Fed speakers talking again. So, we expect them to reiterate their fight on inflation, expect to rate cut or rate hikes. They're not going to tell us exactly when. My personal opinion, and again, none of this should be considered financial advice. We're not financial advisors. I'll put our little banner up here. All of this is for education and entertainment purposes only. But again, I expect a 25 basis point in July. That's my personal opinion. And then we'll see if there's no meeting in August, as we'll see. So I expect 25 in July. Then we'll see what the data shows, but we'll probably get another 25 in September or later this year. So again, we've got Fed speakers standard. Okay, on Wednesday, we've got CPI data, so that's an important Fed input. So expect some volatility around the CPI. That's inflation data, consumer inflation data. If that's still sticky and not coming down at the rate the Fed wants, then they're going to have to hike more aggressively. Standard oil, natural gas, and then we get some jobless claims data, and then we get PPI on Thursday. So Wednesday, Thursday, we get important inflationary data for the Fed and also some jobless claims data. So again, I would expect, higher volatility Thursday, Friday, or Wednesday, Thursday. Then Friday, we get consumer sentiment. The important thing there will probably be the inflation expectation. So again, if the consumers expecting inflation to come down, that'll be a positive. And again, that'll allow the Fed to go at a more measured rate. So I hope that all helps. Look at the earnings calendar real quickly. For next week. So we shouldn't have too much in terms of earnings, but again, you could see who's reporting. We've got WD-40, some retailers, some gold, not a whole lot, should be winding down, and then we'll ramp up into the next earnings season. So again, not a whole lot of earnings, but if you see anything that's important to you or in a sector, So we've got some, agriculture, food, etc., farmers, gold, some gold miners, etc. And then J.P. Morgan on Friday. So there's finance, big finance, Wells Fargo. So it looks like we're kicking off into the finance on Friday. So there's the start of the next earnings season. Some banks. So listen for some weakness, some issues with some of the regional banks that might cause, again, some more fears about the bank collapse that we saw earlier with SVB and First Republic. So keep an ear out for those and see if we get any reaction to those bank earnings. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So we talked about the economic data. Again, we've got CPI data on Wednesday, PPI on Thursday, Michigan sentiment on Friday. So later in the week, more volatility. Reminder, the next Fed meeting is July 25 and 26. So again, we'll see those expectations, probabilities of that 25 basis point rate hike, oscillate based on the economic data as it comes out. And then the next meeting again is until September, as August will be the Jackson Hole meeting, and we'll hear what comes out of that. Let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering up to 12 free fractional shares, as well as a 5% annual interest rate on your idle cash with their cash management. As you can see, we use Webull for our market analysis, a lot of our due diligence, the majority of our trading. This is the online version of Webull. This is the market screen for the online version of Webull. I like to use that for some of the market analysis. I like this histogram. We can see, the histogram of advancers versus decliners. So about 2-to-1 advancers to decliners. Again, the very small percentage, advancers. So even though the number's 2-to-1, the percentage of advancers is pretty small. See the flow. So we see a reversal of the cash inflow that we've seen for the past couple weeks. Is now the NYSE has positive cash flow and the NASDAQ has negative cash flow. So again, we saw that, probably profit taking out of some of the FANGs and a negative cash flow out of the NASDAQ, whereas the past two that we looked at were positive for the NASDAQ. So again, we're seeing those, rotations at reversal sitting at the tops of the market. So again, I'd expect, this kind of rotation to continue between the various market sectors, industries, etc., until, we finally get some kind of breakout. Just a reminder, you can also see the earnings calendar here on the market screen on Webull. Just flip to earnings. You can see what's coming near term, before market open, after market close. Good place to see what's coming near term. We'll look at the industries for the week. So it looks pretty mixed. Some auto, some positivity, transport, some positive, investments. Again, some of the REITs were positive. Looks like some of the healthcare, some retail. Looks like some packaging, some interesting new categories. Utilities positive. Looks like, coal, we saw that rotation into coal. So that was pretty positive. So renewable energy, rotation into solar. You can see some of the solars that outperformed. Oil and natural, oil and gas, positive. look at some of the ETFs. We'll see the markets. So China, it looks like a positive on China, up on the Russell, small caps. So again, rotation to small mid caps. Short on the Dow. So again, industrials, negative. Mid caps in the S&P. So again, a reversal from what we were seeing. Got yen, euro. We'll see in the futures a dramatic decline in the euro market and the DAX market and some potential opportunities there. Yen up, rebound in the yen. Russell positive, small caps, again, small caps, mid caps showing positive, China showing a rebound, Europe showing a rebound. So again, we'll see it was very negative at the end of the week. And NASDAQ short. So again, continued negativity right now in the NASDAQ and tech. Okay, industries. Oil, small cap energy, self-driving, healthcare is split, energy positive, basic materials positive, cyclical, some technology. Consumer defensive is negative. So again, we saw, flight safety quickly on that ADP number, and then that looks like it reversed. Real estate generally negative. Financial services positive. So regional banks got a pop, a lot of volatility there. Commodities, we got energy, sugar, copper, oil, energy. And bonds, got Japan, yen, 7 to 10s, international. So again, looks like some potential rebound in the international markets. British pound, so we'll see that in the dollar strength in the futures in a second. Okay, so we'll look at the futures. Getting in FinViz. So again, we see all of the indices, rolled over. So now it's interesting. We can see the Dow's kind of reaching a support level. It's got this gap to fill and then this support level. So, we could expect a bounce in the Dow. S&P's got more downside, looks, it's got some support here. Again, a gap to fill. So again, potential downside on all the indices, again, with some pretty good support levels. So keep an eye, see if we continue to get that downtrend. We see these dramatic drops in the Euro stocks, and also you can see it in the DAX. I'm not sure if that was just the dollar strength that caused it, or just, that they hit the peak, hit a resistance level and bounced down. I missed this drop in the Euro. I was looking at potential ways to short the Euro stocks. I think it was Wednesday or so, but since we were traveling, I didn't want to pursue that at the time, and then we had that dramatic drop. So we'll talk about in the future potential opportunities. This looks like a pretty strong resistance. Same way with the DAX. I was looking for ways to potentially short the DAX, and we'll talk about that when we talk about ETFs. See the Russell, again, kind of in the middle. It's got potential downside, potential upside. So it could go either way. Nikkei dropped off, hit that resistance, peaked out, dropped off, got some good support. So we'll see if it tests that resistance again. See, oil ran up to 73s. We saw that quick spike in the VIX, and then a pretty quick decline again. We'll see if it continues to trend up, or if it further decays. We'll see if we get any other data that causes any further concerns, fears, etc. But now it's sitting about 15 or so. So again, natural gas, pretty range bound between 2 and 250, 2 and 3. Saw it peaked up, didn't even quite test 3, and then declined. So it's, we'll continue to see volatility, although it looks like the longer term trend is making higher lows and higher highs. So gold, again, significant declines, got support around 1900s, kind of chopping around 1930, 1940, got resistance around 1950. So we'll see if we get that. It's been underperforming the past month or so, so we'll see if we get a bounce. Did get somewhat of a bounce in silver. Again, it held above 23, so we'll see if we get a trend back up to test 24 or not. Platinum, palladium, we'll be looking, see if this is a bottom in palladium, see if this is an opportunity we want to try to swing again. Again, a lot of your agricultural products, some dropped way off, some, surged. I don't know why oats surged so high while corn and wheat pretty much dropped off, but again, a lot of volatility. And we see this, dramatic drop off in the bond prices. Yields went up over 4, particularly on that ADP data. Saw the dollar, surged up over 103 and then dropped off, and now it's back down over 101. So that should help our dollar denominated commodities, but they had not reacted to the drop at this point. So again, that should help gold, silver, etc. So we saw the recovery in the euro, recovery in the yen, etc. I want to come back and talk about ETFs after we talk about our strategies, as we've got some new ones and some changes to look at. So first I want to grab a drink and we'll talk about our strategies real quickly, and then we'll come back to ETFs in a minute. Walter Lyons pointing out, that dramatic move on Friday in the dollar. And again, I didn't see the commodities really react to that move, so we'll see if they again correlate more with the dollar that we've seen in the past, or if they've diverged. So let's talk about making money trading in July. We've got a couple short videos that we put out on how do the stock markets perform in the month of July, and what are typically the best performing stock market sectors and industries. So you can watch both of those short videos via the links in our notes and or on our BeachBum Trading YouTube channel. But let's go ahead and look at how the markets tend to perform historically in the month of July. So we'll look at this chart in Investopedia that we usually use for the monthly historical performance, and we can see usually July is a 1% positive month. So we can see after that decline, April was 1.5%, May down to a positive 0.2, June is usually just slightly negative, and then we get a nice rebound in July, and then a drop off August, September. So again, July is historically a good month, a rebound month, a good month to make some money on the long side, and then we get a pretty dramatic drop off in August, September, and then a rebound towards the end of the year. So again, good opportunities historically in July. Again, you can hear the sectors and industries that typically perform well in July in this video, this short video that we've released. So again, July is typically a pretty positive month, one of the top performers, and get a good rebound in July. So we want to be prepared to take advantage of that rebound, assuming that we get that this July. So good opportunities to make money trading in July, and we'll be hopefully sharing with you our trade ideas on how we can help you make money trading in July, and hopefully we'll see that outperformance. So welcome, MD. Thank you for joining us. Glad to see you. Hope you're doing well. We've also released some videos on how to make money trading in the summer. So again, you can see those via the links in our notes. So again, how to trade the summer stock market doldrums. Again, they typically, after May, they have the, sell in May and go away. And then we have the summer stock market doldrums is the typical thing. And then also, how do the stock markets typically perform in the summer, and the best performing sectors and industries for the summer. So again, both for July as well as the whole summer, you can get some idea of how the markets typically perform, how to take advantage of the summer stock market doldrums, as well as the historical tendencies for July. Again, as we mentioned, we typically for some time we've been saying sector rotation is the name of the game, and I think that's going to continue to be the case. So again, we're going to keep an eye on the groups, industries that see a rotation from underperformers to outperformers, profit taking in the outperformers, and then rinse and repeat. So again, that's what we'll be looking at as opportunities to take advantage of sector rotations. So now we'll jump over to our ETF spreadsheet, talk about some of the changes, look at the breakdown of the technology components. So if anyone has a category of ETFs that you want to look at, if I missed your question in the chat, just a quick reminder that our All Access and VIP Patreons have access to this ETF Google Sheet that we use to research various ETFs, watch the performance. Let me zoom that in a little bit. And happy July to you, MD. Thank you. Appreciate it. Glad to see you here as well. Hope you're having a good July as well. So again, our All Access and VIP Patreons have access to this Google Sheet at any time. So if you'd want access and want to be able to use this to find ETFs for various indices, categories, etc., if you join our Patreon at the All Access or VIP level, you'll get access to this Google Sheet as well as our dividend payers and our puts, return on invested capital, as well as future Google Sheets, etc., that we release. We also have several videos on financial, gold and silver, real estate, ETFs. Wanted to respond to a question that Easy Mike had asked a while back before we left on our travels about ETFs to short Australia. So I did some research on ETFs to trade Australia. I couldn't find any in FinViz to short Australia, so I put the link there. So how to search in FinViz for ETFs or stocks related to Australia. I also looked in the ETF database, and again, there are none to short Australia in the ETF database, but there are two to long Australia, and I'll look at those both in the research tab in our Google Sheet in just a second. And both of those are shortable. So as far as I know, I couldn't find any ETF to short Australia. But you could, if you're trading in an account that allows you to short ETFs or short stocks, you could short either EWA or FLAU. Both of those are ETFs that are long on Australia. And again, they're both shortable. So we'll quickly look at the risk reward of those two. Again, you can find these in the research tab in our ETF spreadsheet. So you can see here's the two ETFs on Australia, EWA and FLAU. We see the risk reward profiles of each of them. They don't, have a real great longer term risk reward profile. So we do have EWA in our main sheet. it seems to have a little bit better 52-week risk reward and a little bit better bottom to top risk reward. So again, we have EWA already in our main ETF sheet, and you can access the definitions of each of these we have 2 links here in the research tab, both to their definition in the ETF database as well as in FinViz. So again, you can access their profiles directly in the ETF database and in FinViz via these links in our research tab. So again, to answer that question about ETFs to short Australia, I couldn't find any directly to short Australia, but again, either EWA or FLAU is shortable. So again, you can use a short if you have an account that allows that. You can short either of those EWAs to short Australia. So I hope that helps. Also, as we saw in the futures, the DAX had a significant drop. So I am in the process of researching ETFs to long or short the DAX. You can see the ETFs in the ETF database related to Germany, related to the DAX via this link. And I've put those right now at the bottom of the ETF database sheet in our ETF Google Sheet. And I will be doing some further research. I still don't see any to short, but again, some of these may be shortable, and I want to look at the risk-reward profile of the various ones so that we'll have something that we can trade the DAX. Also, I'll look at the ones in a second about Europe, because again, that was an opportunity I was looking at and just missed on that dramatic drop in the Euro stocks futures. Also, just a reminder, an FYI, I found several that have been discontinued, so we've removed those from our ETF sheet. There's JO on coffee's been discontinued, JJU on aluminum's been discontinued, BAL on cotton's been discontinued. So we'll be looking for other ETFs to long or short cotton, cotton, coffee, and aluminum. And then we'll be doing more cleanup. It looks like they discontinued a number of them. Looks like iPath, Bloomberg specifically has discontinued a number of their commodity-based ETFs. So again, we'll clean up our sheet, make that clean and as usable as possible for all of our fellow BeachBum traders. So again, if anyone wants to look at a particular category, we can do that. Could just grab a put, yeah. Many of these are stocks for trades. Points out you can do puts, put spreads, options. Again, there's limitations on option strategies you can use in retirement accounts, but some are available, so you could use puts, etc., as well as for those ETFs that are optionable. And I believe, yes, our ETF spreadsheet will tell you if it is optionable. It may, I don't know, you guys can let me know if it's worth adding a shortable type column and whether we want to track whether ETFs are shortable as well. We can look into doing that if that's of value to you all. So I also wanted to look at these Europe ones. So these are the ones I was looking at to short the Euro stock. So you can see the long, I've got a FTSE Europe bull, and to short, I've got a ultra short, and I was watching this high to see, it was close to that high, but I was trying to use that 52-week high as an indication as to when to potentially go long on the short version. And then again on Wednesday or Thursday, we saw that dramatic drop in both the European stock market and the DAX. So again, I'll be keeping an eye on future opportunities. And again, we'll see if we can find a way to play the German DAX in a similar fashion. We've been talking about Japan. Again, Japan also declined. We have a video on our strategy of using, EWV, using EZJ as the indicator for the top, and then shorting the Nikkei using EWV. So again, you could see that video in more detail on that strategy. Again, plenty of opportunities. We saw natural gas is, as always, is pretty volatile. So day trading, short-term trading. Same thing with oil. Oil dipped around 70 and then popped back up to 73. So you can find ETFs to trade oil. We'll be talking again about palladium. We're looking at opportunities in palladium using PAL. You can see it's pretty close to its 52-week low. Question is, is that the bottom? Is that a support level? Or is it going to continue to decline? ETFs to, long or short the various indices. Again, short term, we expect some resistance. We'll talk about the technology components. We're looking at, if the semiconductors peak out, we're looking at opportunities with SOX-S. And we were watching weed, etc. So again, you can find ETFs in our spreadsheet on, many categories. And what I do is, look at the futures, see potential opportunities, try to find an ETF to play long or short that particular category or commodity, etc., using our ETF spreadsheet. So again, if you want access to that, you can join our VIP or all access levels of Patreon. And tomorrow, again, we'll talk in more detail about some of those ETFs we're watching to take advantage of some of those opportunities. I just want to quickly look at the technology components, see if there's some opportunities there. So again, you can access the screener in the screeners tab in our Google Sheet. I've got the technology components and then a number of other screeners I've used in the past, and you can access those again in the screeners tab in our Google Sheet. I want to look at the FANGs. Again, we can see that upwardly trending channel. We can see it's that lower trend line is providing good support. The upper trend line is providing good resistance. So we'd be looking at, shorting the FANGs when they bounce off that upper trend line. See biotech's broken down below its support level. It looks like it's, got significant potential downside below its moving averages. So, if you want to trade that short term following it down, you can do that with Lab D. So again, semiconductors broke down below its trend line. So again, got some support there where it previously touched the trend line, but again, it's broken down through that support, got quite a bit of distance above the moving averages. So, short-term trend, if you want to play with SOX-S, looks like there's, potential there. The NASDAQ's kind of sitting in the middle of its trend between its moving average and that upper trend line, but you can see all of these guys are respecting that upper trend line and getting rejected off that upper trend line. So we'll be looking at opportunities to use the short versions of these ETFs, when we see a peak at the previous high end or that upper trend line for opportunities to short and play that rejection for the near term. So I hope that all helps. So again, tomorrow we'll talk about individual stocks, individual ETFs that are on our watch list for this upcoming week. We'll also talk about our dividend-paying stocks. We'll look at those tomorrow. And we'll talk about our option strategies as well. We'll look at potential opportunities as someone mentioned earlier, Stocks for Days mentioned, selling puts. So we'll talk about some of the opportunities we've been trying to play with selling puts. So, okay, I've got a few minutes. If anyone has any questions, if I missed your question, I apologize, and please throw it back up in the chat. I'll try to address it at this time. MD says watching China. after Yellen's visit. Yep. And we're currently long. Again, you can see the China ETFs. We're currently long yen still, and we've been selling and buying back covered calls on that for quite some period. But if you want to, day trade, short-term trade, we tend to use yin and yang, which are the leverage 3x to trade China. There's also K-Web, C-Web, etc. So again, we're currently long yen, longer-term swing. I think the long-term trend in China is up, but on any given day, you'll see a lot of volatility. So there's day trade scalp opportunities. Again, we use yin and yang typically. Okay, if no one else has any questions in the chat for right now, again, we'd love to hear your feedback on how we can improve our weekly trading game plans, our videos, our community, etc., to add more value for all of our BeachBum traders. I was glad to see several of our community chatting in our Discord. Again, our Discord's free to join. You can find an invite to our Discord in the description box below. And we invite and welcome and encourage you to join our Discord. We can chat, 24/7 in our Discord. I tend to prefer, the Discord chats as, they maintain presence beyond just given video, and they're also searchable, and, you can thread, reply, etc. So again, I personally prefer, chatting in the Discords. And again, I'm glad to see our community utilizing that. Most people, start in the Beach Party channel, but we have channels for various asset classes, different trading styles, etc. So again, come join us in the Discord. We can continue these conversations, anytime in the Discord. If you have a question for us after the fact, please tag us in the Discord. Looks like I've got another imposter. That is anyone with a number is not us. We are BeachBum Trading, lowercase, all us. I'll take care of that imposter after this stream. Please tag us if you have any questions, comments, etc. in our Discord that you'd like us to address. Also, you can find links to all of our social media sites on our homepage, beachbumtrading.com, bum without the U. So you can always contact us via any of our social media sites. We have a Facebook group, a Reddit community, etc. Also our tools, resources, etc., all in the link section on our homepage. So we hope that helps. So thank you everyone who joined us in the chat today for part 1 of our weekly trading game plan. We hope that this all helps you make money trading in July. We hope you'll come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern for part 2 of our weekly trading game plan for the week of July 10th through July 14th. And again, we'll be selecting our top swing trading stocks to watch for this trading week. We'll also look at our dividend payers. We'll talk about option strategies, etc. So if you have anything you would like us to look at specifically, please let us know. And otherwise, have a great rest of your day, and we hope to see you all tomorrow for part 2. Thank you again. Have a great day.